So let's do some top-down analysis on gold so that we can know where we'll be placing our trades this week. So you will go to the trading view, and as you can see, we are in an upward trend, and this is the trend line. So last week we came from a resistance point. Let me just draw it. That is it. This is a place of resistance, and we came and filled some fair value gap that was left the other week. So the fair value gap is here between this candle here on Wednesday and the Friday candle. We had some gap here which was filled last week. So this week I'm expecting the trade to go up to fill some fair value gap, and since we cannot see it on the daily chart, we can go to the 4-hour chart, and you can see that we have some fair value gap that we got it last week when the trade was moving from the point of resistance to filling the fair value gap we had in the daily candle. So I'm expecting this week we'll be going towards this fair value gap here. Let me draw some rectangle here. So this is a fair value gap here. So these are zone where I'm expecting the price to move towards this week. And we also have another fair value gap at the top of it here. Let me create a clone of this. So you have some fair value gap here. A fair value gap is made of 3 candles. So you can see this candle here with a wick, followed by another candle, and then this candle, and in between there is a gap. So I'm expecting that will be heading towards this area of interest. And the reason why I'm thinking about that is because you can see our daily fair value gap was here, and you can see there's a wick here, and we didn't close below this wick. So meaning that there is more buyers in this area. So I'm expecting the trade or the market to be bullish. As you can see, we had a very strong bullish candle, and today we retraced to fill the gap made by the 4-hour bullish candle. And after that, you can come to the 1 hour or 15 minutes. So you can come to 1 hour, and you can see we have just filled this fair value gap, and there is a number of rejection here. So meaning that the bulls in the market or the buyers are strong, and we are expecting that we'll have an upward trend again. So for confirmation, you will come to the 15 minutes to see how the market is behaving, and also check out key areas where liquidity is likely to be swept. So as you can see, this is the Asian session liquidity, and we were able to sweep it. And right now we are in the London session, and as you can see, at around 10 we had a bearish candle, and it didn't close below this week. So meaning that we have a good number of buyers here. So we are expecting the market to be bullish. So After confirming that our weekly bias will be bullish, we'll start looking for areas of entry. So since I'm trading a small account, I'll go to the 5 minutes, and mostly I'll be looking for trend lines and break of structure. For example, we can see as we were heading towards the fair value gap that we had on Friday, we broke this trend line. So I'm looking for a retest here because I can see some trend line here. And I expect the market to come back to retest this area before we go towards the fair value gap that we had in the 4-hour candle. So we'll be waiting for the market to retrace back here. Then I'll enter my buy position and place my stop loss below this candle here. Of course, we can see we have had a liquidity sweep here and here. Let me just draw some line. Here you can see we have some liquidity sweep here and also a smaller liquidity sweep here. So after the market have swept the liquidity, then you can be more confident with your trade. So I'm expecting to enter my buy position here. Let's just wait for the market to retrace back here, and then I'll enter. So when you are in the 5 minutes candle chart, look for trend lines and break of structure. And that is it for today.